We are from Group 1 and we're gonna present about the Dharmaga Berhad. Please have a seat and we are ready to take off. Let me present ourselves first. Our group has 3 members, which is RAIDAH,
Hi.
VANIISHAA, and me. Hi!
Hi.
Hi, and welcome to 3E Accounting Firm. I'm Hanim and I'm the junior accountant at this firm. Nice to meet you. It's been 6 months since I'm working for a 3E accounting firm, but recently I'm facing some problem where I stuck to do the requirement needed from my client, which is the mega berhad. What's to do? What's to do? Hmm. Aha, I know. I should seek for an advice and help from my two seniors accountant, which is Miss Rita and Miss Vanisha. Let's call them. I hope that they are free now. Hi, Miss Rita and Miss Vanisha. Are you free now? Can I meet you after the lunch?
Sure.
Yes.
Great, thank you. See you soon. Hi, Miss Vanisha and Miss Rita.
Hi, Miss Hanim. So, what's the matter?
Yes. What is the issue, Hanim?
Actually, I've been asked by my client, which is Dermaga Berhad, to prepare a statement of profit and loss for their company in 2017 as soon as possible. But I'm stuck where I need to calculate on 4 requirements needed. So Miss Vanisha and Miss Reda, as my two seniors accountant, can I get your time, or are you mind if I get your um time for a consult or maybe some advice on helping me to preparing this?
Yes, sure, Hanim. We will help you. Don't worry, okay?
So this is the first requirement that we need to solve.
Let's start with first additional information. First step is we must calculate price of the contract earned in 2017. 80% of progress through completion of contract in 2017 have to minus with 50% of progress through completion in 2016 and multiply with total price of the contract, which is RM 9 million. This will give you the price of the contract earned in 2017, which is RM 2,700,000. This amount need to be recognized as revenue to the company. Second step is we need to calculate the cost of progress towards completion of contract in 2017. 30% of completion of contract in 2017 need to multiply with total expected cost of contract, which is RM 5 million. This will give you cost of contract of RM 1,500,000 in 2017. This amount need to be recognized as cost of sales to the company.
Oh, I understand, Miss Vanisha. So let's move to the second requirement.
Calculation for additional information too. First step is we must calculate the present value of Dermaga Berhad. The formula of present value is payment that need to pay times with discount factor. 1,012,000 ringgit that need to pay on 1 July 2017 times with 0.9091 discount factor at 10% for 1 year. The present value will be 920,009 ringgit and 20 cents. Second step is the adjustment on operating expenses. Present value that we calculate in step 1 need to minus with provision of 800,000 ringgit. This will give you price of adjustment, which is 120,009 ringgit and 20 cents. This amount need to be recognized in operating expenses. The third step, we need to calculate discount prepaid for 6 months, which is from 1 January 2018 until 1 July 2018. So, present value 920,009 ringgit and 20 cents will be times with 10% of discount and 6 per 12 months. This will give you price of discount prepaid for 6 months, which is 46,000 ringgit and 46 cents. This amount will be recognized in finance costs.
Now, let's move to the requirement 3.
Calculation for additional information 3. First step, we need to calculate the coupon value. The formula is principal value times with coupon rate. Principal value of Dermaga Berhad is 5 million ringgit that issue times with 6% of coupon rate. So, the coupon value is 300,000 ringgit. Second step, calculate the total cash flow payment for year 2. The formula is principal value plus with coupon value. So, the principal value for Dermaga Berhad is 5 million ringgit plus with the amount of coupon value 300,000 ringgit. So, we will get 5,300,000 ringgit. Third step, calculate the total present value. The formula for present value is payment that made times with discount factor. For year 1, payment 300,000 ringgit will be times with 0.890, which is 8% of discount factor for first year. The amount will be 297,000 ringgit. For year 2, amount of 5,300,000 ringgit from step 2 will be times with 0.857, which is 8% of discount factor for second year. So, present value for year 2 is 4,542,100 ringgit. The total present value of liability for Dermaga Berhad is 4,809,100 ringgit. Fourth step is calculate the interest need to be applied to the liability. 8% of discount factor times with total present value of liability, which is 4,809,100 ringgit. This will give you the interest of the liability, which is 384,728 ringgit. Fifth step is we need to calculate accurate interest on liability. The interest of the liability 384,728 ringgit will be minus with coupon value 300,000 ringgit. So, the adjustment of 84,728 ringgit will be adding in finance cost.
Next is the last additional information. First step is we need to find remaining duration after completion of construction. The duration after the complete of construction is 3 months, which is from 30 September 2017 to 31 December 2017. Second step is calculate the loan interest expenses after construction, which is for 3 months. The total interest expenses, which is Rm 2,560,000, is multiplied by 3/12 to find the interest expenses for 3 months. The interest expenses for 3 months is Rm 640,000, and this recognized as finance cost to the company. The third step is calculate the actual cost of capitalized by subtracting Rm 32 million with Rm 640,000 of interest expenses. The actual cost of capitalized should be Rm 31,360,000. Fourth step is calculate the actual depreciation cost that should be charged for 3 months. The capitalized cost of Rm 31,360,000 should divide with useful life of 20 years and multiply with 3/12 for 3 months. The actual depreciation cost that should be charged for 3 months is Rm 392,000. Next, we need to minus actual depreciation cost, which is Rm 392,000 with the recorded depreciation cost of Rm 400,000. This will give you a prepaid depreciation of Rm 8,000, and this recognized as a reduction in.
Oh, thanks Miss Vanisha and Miss Raida. So now I'm clear with all the requirements. After all the requirements now being fulfilled, I need to transfer all the calculation from the adjusted trial balance to make this statement of profit and loss for my client Dermaga Berhad. Thanks a lot Miss Vanisha and Miss Raida. So, as you can see on the screen, this is the trial balance for Dermaga Berhad before the adjustment as at 31 December 2017. So now, before we move to the statement of profit and loss for Dermaga Berhad, I need to do and explain some adjustment for the revenue. For the revenue, the original amount from the trial balance is 86,400,000. As we have do some adjustment to the requirement 1, we need to add those amount 2,700,000 to the newest revenue component. So the total for the revenue in the adjusted trial balance will be 89,100,000, and this amount will be transferred to the statement of profit and loss for Dermaga Berhad for the year ended 31 December 2017 under the revenue component. Next is for the cost of sale. The original amount from the trial balance is 43,400,000. As we have done some adjustment to the requirement 1, we need to add the amount which is 1,500,000 to the newest cost of sale component. So the total for the new cost of sale in the adjusted trial balance will be 44,900,000. And this amount will be transferred to the statement of profit and loss for Dermaga Berhad for the year ended 31 December 2017 under the cost of sale component. Next, we have to find the gross profit. In order to find the gross profit, the revenue that we get, which is the 89,100,000, need to be minus with the cost of sale, which is the 44,900,000. So we get the gross profit for about 44,200,000. After we get the gross profit, next we need to do some adjustment for the operating expenses component. The original amount from the trial balance is 27,040,000. As we have done some adjustment to the requirement involved, we need to add amount which is 12,009,20 and minus with 8,000. So the total for the new operating expenses in the adjusted trial balance will be RM 27,015,209 ringgit and 20 cents, and this amount will be transferred to the statement of profit and loss for Dermaga Berhad for the year ended 31 December 2017 under the operating expenses component. Before we move to the next section, which is the finance cost, we need to calculate the profit from operation. The amount that we will get for the profit from operation for Dermaga Berhad is 70,047 ringgit 919 ringgit and 30 cents. We will minus the gross profit with the operating expenses that we get before. Then, we will need to minus with the finance cost. For the finance cost, the original amount from the trial balance is 24,080,000. As we have done some adjustment to the requirement involved, we need to add with the 46,046 cents and RM 84,728 and RM 640,000. So the total for the new finance cost in the adjusted trial balance will be RM 32,050,728 ringgit and 46 cents, and this amount will be transferred to the statement. After complete all the requirement needed, in order to get the profit before tax, we also need to add the investment income. For the investment income, the amount will be the 240,000, and the total for the profit before tax will be the 40,032,262 ringgit and 34 cents. Then, we need to minus with the tax. For the tax, the amount is 260,000, and we will get the profit for the year about 13,777 ringgit 262 ringgit and 34 cents. So the profit for the year for the Dermaga Berhad as the statement of profit or loss for the years ended 31 December 2017 is 13,777 ringgit 262 ringgit and 34 cents. In this case, we prepare the profit and loss statement for year ended 2017 by looking into the trial balance and additional information of 3E accounting firm client, which is the Dermaga Berhad company. For this case, Dermaga Berhad had acquired profit of 30,777,262 ringgits and 34 cents for years ended 31 December 2017. In preparing this statement, we learn and apply on how to make recognition, measurement, and presentation of the adjustment. Moreover, we also learn on how to apply appropriate accounting standard related with the adjustment involved. To conclude, we have gained much knowledge on how to prepare the profit and loss statement as it drives to a clear picture of whether the company's operation. Before ending, we would like to gratitude our sincere and appreciation to Dr. Farha for spending her precious time in our presentation. All the good come from God and all the bad come from us. Thank you and bye for now.